Hey everybody, this is RC Peck. It's great to have you here. The name of this webinar is Wealth on Demand, the strategy that keeps your money growing while avoiding the next crash, all without having to trade or time or tune into the latest news cycle. So it's great to have you here, and I want to jump into the training and not have a long intro. So let's get to it. Okay, so guys, look, in the next 45 minutes, I'm going to show you where people are losing about $40,000 a year on a $500,000 portfolio, and they don't even know it, right? And believe me, when you are losing $40,000 a year on a $500,000 portfolio, this is not about fees, right? I'm talking, and what's most important about this is no one's talking about this area of loss, right? Area of lack of growth. But I believe this is the most important area, and I'm going to be coming back to this again and again. Also, too, how to participate in those long uptrends, right? Those long bull markets without having to suffer through the steep declines. All right. And how to know with certainty if your money's going to be okay. Is it okay? Is it still okay? Is it still okay? Even if the news or the news feeds or the blogs, even if they're frightening, you will know with certainty, hey, my money's okay, I'm okay. Right? In the next 45 minutes, I'm also going to show you how to use the power of price specifically to really have that confidence and that competence in growing your money. And I find a lot of times that's what people are looking for. They want to be confident again, and they want to be competent in this area of their life, and they've been looking and they haven't been finding it. Right? I want to show you how to know when you should be in or out of the stock market, right? Even if it seems like a crazy or ridiculous or hypey thing to say, I'm going to show you how you should know or how you can know whether you should even be in or out of the market, again, without trading or timing or tuning into those cycles, right? And I want to show you these things, right, without newsletters or daily picks or hours in front of CNBC or at night after work when you're your second job looking, without Twitter or blogospheres or any of the investment noise, without that. So look, here's my promise to you. I'm going to show you the strategy. I'm going to show you the strategy of those. I think I did 6 promises to you, what I was going to show you in the next 45 minutes. But here's the big promise. I'm going to show you this, and it's 3 shifts or 3 steps. That's what's probably most wonderful about this is it's very implementable. When people get trained in this, their compliance is near 100%. So my promise to you is that I'm going to show you this strategy now. Now, I want to make sure this is you, because if it's not you, the time on this webinar is not going to really be worth your time. So I want to make sure who I'm talking to are the right people. So number 1, you subscribe to Pick of the Month investment newsletters, and you might realize that they might actually be the cause of your angst and worry, and they're creating the hype and the fear and the worry. All right. You're starting to realize that your big box advisor, they just might not have your best interest, right? It may have been okay during the accumulation years, but having seen what they did in the 2000 dot-com crash and the 2008 global financial crisis, and you're starting to really question, you know what? I'm not sure they have my best interest, right? You feel the burden of the money you have, right? You feel the burden of it because it's more now, or maybe there was an inheritance, but you want to be a good steward of it. You want to do things the right way. You've woken up worrying about your money or the markets. The markets wake you up at night. Worrying about whether you have enough has woken you up. And here's the thing. You've taken the options trading course. You've taken the swing trading. You've taken some other courses, right? So it doesn't have to be option trading, but you've taken some courses and it still wakes you up at night. All right. You know there's a better way to invest. You know, like, there's got to be a better way than what I'm doing. But you've kind of run out of the places to look. And the last is your earnings runway has ended. Earnings runway is code for your job has stopped, right? Or it'll end soon. And missteps now are going to hurt even more than last time. So this is Clearly, what I'm going to talk about are things that have not been talked about before. Clearly, they'll probably land for some people like, I knew it. I knew there was something. And others, it might just be too triggering and they won't like it. So just before we even move forward, just know that I'm going to be talking about investing in a different way, in a powerfully simple way, right? Bottom line, you really, really, really want to know you're going to have enough. You want to know you're going to have enough. Now, here's the thing. We've been taught certain things, and based on us getting taught these things, it's really created these filters and this mindset and this structure and this thought process that does not help us or has been hurting us, right? We've been taught that it's the right diversification type. It's the right allocation model. It's the right rebalancing. It's the right symbol or pick or company or secret meeting. It's the right newsletter subscription, or it's the right gone fishing portfolio, right? No, it's the right advisor. I just got to find the right advisor, right? Or maybe it's the right insurance product, the right annuity, the right whole life, but it's some sort of insurance product that has a, air quotes, guarantee on it, right? Or it's maybe the right tip from the guy in the office or gal in the office. It's the right insider tip, right? It's the right analysis, right? This analyst over here has got a different projection, so I'm going to listen to that analyst over there. Or I'm going to look at the earnings reports or the jobs reports or the right economic outlook. You're following people who speak more economic language about what the economy is doing and not the market. Or the right news channels. No, I got to be at the right blog. We've been taught to look for the answer in these places, whether it's the allocation or the diversification or the insurance product or the jobs report. These are the things we've been taught. And so what happens is when we get worried or we have angst or we're stressed out about this, we just go back to the same places. Okay? Here's the thing. Those aren't the problem. Meaning you don't need a better earnings report or better analysis on the economic outlook or a different pick of the month newsletter. Those aren't the real problems. The real problems aren't that you haven't found the right, what I just showed you. The real problem is you haven't made these 3 shifts that I'm going to show you now. And the good news is, there's a better way. There's a way to eliminate all of those symptoms, because the prior page, having to look in there, those are kind of the symptoms of the problem. Okay? And when you make these 3 shifts, your life transforms. Your anxiety and your stress gets eliminated. And if it creeps back in because you read something or someone said something, you can literally extinguish that anxiety and stress and worry in seconds, in moments. You will really know, will I be okay? So let's get into these, right? And I want to talk about what happens once you've made them, right? Because once you make these shifts, you'll be able to eliminate all that market anxiety and stress, right? You'll know the difference between a 2008, which was a crash, a 60% crash, and a 2015, which was just a sideways correction. It's a very big difference between knowing. You have to know the difference between a crash and a correction, right? You'll be able to filter out the noise and the hype and the BS and the fear. And you'll be able to verify that what you're doing is right. You'll be able to verify that signal that you've been trained to follow, okay? You'll know in seconds, right? You want to know in seconds if you do read a scary headline that you'll be okay, or some sort of newsletter pitch. You'll be able to verify what is true and what is not, right? And once you make these 3 shifts, you'll know how to generate that income from the money you've accumulated the best way, and not through an insurance product. I don't sell insurance products, okay? And you'll be able to do all this without hours in front of the computer. You'll get your life back. You'll feel for the first time that the market's working for you and it's not trying to take your money. You'll have a better life. You'll sleep better at night. You won't be woken up because of the market. You'll say, you know what should I do with my life now? Because I've figured out this whole area of it, and let's move forward. It's so, so powerful. All right. So look, guys, just really quickly, a little bit about me. My trained clients, they avoided the 2000 dot-com crash and the 2008 global financial crash, and they knew when to get back in afterwards. And my specialty is training people. I train people who have tried everything, right? And what happens is they get the control back of their investing and their wealth and their money in that whole area of their life. And what I really specialize in is people actually being able to implement what they know to do, right? They become who they're supposed to be when they're supposed to be it. It doesn't matter what you learn. It's who you are, what information you filter out, what information you allow in. It's how you behave that is most important. And once you have that training down, that rewiring down, you get to avoid a crash. You get to know the difference between a crash and a correction. And you do this all in a powerfully simple way that has super high compliance, meaning you're actually able to do it. Okay, so let's talk about these 3 shifts. Let's get into the 3 shifts now. And like I said to you before, they're not going to be maybe where you thought you should be looking. And I'm going to make sure I'm clear about what they are. But what I noticed over time, I've been at this personally over 30 years. I've been training people for over 20 years. And what I've noticed is people who do well, whether they have $1 million in or 10 million in or 100 million in or $1 billion in, what I notice is they all do the same 3 things. And the people who have angst and overwhelm and worry, they don't do these 3. So discovering these 3 shifts has been really critical to people's lives, not just their money. Okay, so shift number 1. Here's shift number 1, guys. Number 1 shift is you have to stop over diversifying. You have to stop over diversifying. We have been taught to over diversify. And since we have, it is hurting us. So now look, there's only 2 reasons why people over diversify. 1, they've seen people do it, right? They've seen their big box advisor do it. They've seen other people do it who they maybe respect, but they've seen people over diversify, right? Have their account with 10 ETFs or 50 symbols or 100 symbols. So they've seen this over diversification, and maybe they've seen it everywhere. So they just assume this is just how it's done, right? Or they've actually been taught, no, to diversify. They've been taught probably to diversify, but what they've really been taught is to be over diversified. And it's got some pretty negative consequences to your life and to your money. So let's talk about that. So now look, if the stock market itself, and let's say this boat is the stock market, stocks, equities, if this boat sinks, it doesn't matter where you are on the boat. It doesn't matter where your money is on the boat. It doesn't. Because if this boat's going to go down, all right, or maybe let me be less scary. If this boat is just going to be listless in the water for 18 months or 30 months, right? But let's just say it sinks. And let's just say a sinking is a 50% drop in the market. It doesn't matter where you are on the boat. That over diversification is not going to help you. In fact, it's going to hurt you because you're overconfident that, oh, wait, I'm good because I'm diversified. So whatever comes my way, I'll be able to handle it best. But that's actually not true. And if you just start to notice that when the market falls that 40, 50, 60%, everything goes with it. And that diversification, certainly the over diversification, will not help. So here's '08 right here. And though there are only 6 different colored lines, they all represent different parts of the stock market. You have the S&P 500, you have the international stock market, you have deep value, you have small cap, you have mid cap, you have international value. You have very different segments of the market. And yet, when the stock market falls that 40, 50, 60%, everything goes with it. You get a diversification. Certainly over diversification is actually what's hurting people. And I want to give you one example. I want to put an actual price to what over diversification is costing. Now, before I do, I want to be clear. This doesn't mean put all of your money in one individual company like Uber or eBay. That's not what I'm saying. What I'm saying is we've been taught to way over diversificate. And this over diversification is absolutely hurting us. So let me give you an example of just exactly how much it's hurting us financially. So here's a price chart comparing the international stock market. So the red line is the Morgan Stanley All World Index minus the US. That's the red line on the screen. And the blue line is just the S&P 500. Okay, and this price chart is about 12 years in length. So the blue line is clearly outperformed the red line. Blue line's up 160%, and the red line is down 11%. So here's the thing. It's super easy to train the brain to know and train your money so you can know in moments where your money should be. Where's the strength in the market? Is it in the international? Is it domestic? Is it large cap? Is it small cap? Is it energy? Is it technology? Is it deep value? Is it growth? You'll know in moments, and I'll get to that. That's the third shift. But you'll know in moments where the strength in the market is. But we've never been taught to think this way. We've never been trained to think with our eyes open facing the market. But let's just talk about the cost of this. So if you had a $500,000 portfolio at the beginning of that 12-year period, okay, and U.S. domestic has outperformed international longer, but I'm just giving this one example. So during this example, if you had all your money just in the lead sector, the lead segment of the world, which in this case happened to have been the S&P, your $500,000 would have grown to $1.3 million during that same period. But if you implemented and followed this over diversification where you were taught, no, you got to have international. You got to have international, right? Because you were shown pieces of information to say, yeah, they do about the same. Yeah, they do over like 30-year time periods or longer. So if you took that same 500,000 and you split it 70% on the blue line, the previous slide, and 30% on the red line, or 70% U.S. domestic S&P 500 and 30% international, that same 500,000 would have only grown to 1,031,000. Right? That's a loss. It's an invisible cost. You did not have to lose out on that $268,000 amount. You didn't. But there's a missing $268,000 from your life. This is expensive. It's very expensive to over-diversify. Now, that over-diversification in this example, that was costing at least $22,375 a year during that time period. That's on a $500,000 portfolio. And I just gave one example, guys. This was just comparing why in that time period you did not want to be over-diversified in international. But again, like I said before, people are over-diversified in the size of their stocks, small cap, mid cap, large cap, mega cap. They're spread out all over the place. They're also spread out all over the place for sectors, energy, industrial, and consumer staples, healthcare, technology, finance. They're spread all over the place, and that spreading out slows the growth. So it could very likely be more than $22,375 of lost money every year during that 12-year period, right? And it could possibly be more. But that is an area of loss. And so the first shift in getting back your life, in getting back control, and sleeping better is to stop the over-diversification. And notice the example I used was the S&P 500 via symbol SPY. I'm not saying you should use SPY. I'm simply saying that one symbol still has diversification within it, but it's one symbol. But when people stop over diversifying, they start to get control back over their life again. They start to sleep better. They start to go, wait a second. My money is growing so much better. I'm not having to tune into the latest news cycle or trade or time. It's about understanding how to filter that, how to know. And Dean was a guy that came into my world. He had done everything. He even had his securities license at one point, figuring if I had my securities license, that would tell me what to do. He did option courses. he can talk to anyone about any option strategy, a strangle, an iron condor, cashback puts, covered calls. He's like, I know the language. I did it. Compliance is so low. He goes, RC, there's just a point where the brain can't sustain it. And I've talked to other people who sell option trading classes or swing trading classes or day trading classes, and compliance is almost zero, meaning once people get hit with enough Mondays, they don't have the experience they want. And so Dean wanted the confidence and the competence to grow his money regardless of what the market was doing, regardless of what or who was manipulating it. He wanted to do it. And he got it. Finally, he took this step, this shift, and the next two I'm going to show you. So here's the second shift. So the second shift is I want you to reduce your buy and holding. I want you to reduce the amount of time you buy and hold, right? Now, we've been taught buy and hold is the way to go because the world is just so complicated and complex. And so the answer or the way to protect and grow your money has to be equally complicated and complex. And it's so complicated. We just, you know what? Let me just ask your age and let me find out your self-described risk tolerance. Like we've been taught it's about us. We've been taught it's about our age. The market doesn't care what year you were born. The market doesn't care how you filled out those self-described risk tolerance questionnaires at your big box advisor. Now, we care about our money, right? Our spouses care about our money and our wealth. Our kids do, right? Your cause and your community, but the market doesn't. And so the second shift is to reduce your buy and holding and instead look to this one relationship, which I'll get to. But before we do, I just want to talk about how reducing your buy and holding can be that thing that you've been looking for. Okay. Now here's the thing. People didn't get hurt because they owned Facebook over Johnson & Johnson. They got hurt because they just kept buying and holding. They just kept buying and holding. That's why they got hurt. It wasn't Facebook versus J&J. This is what I really want you to understand. When the money stops flowing into stocks, and let's call that asset, that stock asset, the future's fine. Guys, the future is fine. So there's this asset that people put their money into called the stock market. But let's change the name. I think the future's good. I think the future's fine. I'm going to put it into this asset. If money stops flowing into the future's fine asset and instead flows into, I'm starting to be worried. I am worried about the future asset. That's a fixed income, right? So when money starts flowing into fixed income, way over the stock market, that's when we get those crashes of 40, 50, 60, even 70%, depending on where you are in the world. Your stock market fell 70% in 2008. In the US, it was only air quotes 60%. So when we reduce the buy and hold, we increase the control over our future. We increase the control over our money. We become more confident and competent on what to do with it, because what we do is we put price in the middle, not our age, right? So look, the S&P is an exceptionally hard vehicle to beat. But in the dot-com crash, it fell 49% specifically. Let's round it to 50. And in the global financial crisis crash, it fell 58%. Some people lost more. We just round it to 60. The point I want to point out to you is that took 12 years. That was 12 years of your life where your money wasn't growing. It was just getting back to break even. Would you want 12 years back? Would you want 8 of those 12 years back? That means your money is growing for a longer period of time. And guys, you could go do a 60-40 balance fund. That's where 60% of your money is in stocks, 40% is in bonds. You still would have lost a decade of growth. Now, your losses wouldn't have been as deep, right? Only 33% only instead of 50, only 43 instead of 60. But look, if you're in your 50s or 60s or even early 70s, losing 40% of your money does not feel like a deal. In fact, people are probably in bonds because they're thinking that the volatility is going to go down, way down. But even a buy and hold with a balance fund can't, or increases anxiety, stress, and worry. There's a better way. And then lastly, even with target date funds, they're one of the best financial products being sold today by mutual fund companies and ETF companies, right? Because people go, oh, I'll pick the date I need the money. But guys, this is the worst of both the lack of the first shift and the second shift, right? The red line is the Vanguard 2060 target fund. So not only are you going to take a hit with all the big losses, meaning you're not even going to shift for shift number 2, which is reduce your buy and hold, but you're going to be over diversified. The net result is you unnecessarily underperform. This is the thing I really want to get, that if you over diversify and if you buy and hold, whether it's based on your age or when you're going to retire or whatnot, you'll still get to where you want to go. And the way I want you to think about it is, if you're in New York and you want to get to Seattle, let's call Seattle retirement, or let's call Seattle, I know everything's okay. I know all will be okay. I'll have the confidence and competence. Over diversification and over buying and holding, that has you driving across the country at 30 miles an hour. You'll still get across the country. But what I've noticed in working with people for over 2 decades, anxiety goes up, worry goes up, stress goes up, angst goes up. So yeah, you'll get across the country driving 30 miles an hour. But the longer someone does it, the more anxiety, stress, worry, and overwhelm they have in their life, the less confidence they have, the more they worry. And shift number 2 is about really knowing, wait a second, there's periods of time where we want to, not be in the market. And think of it more like 3 shifts. You shift into a boat and you shift out of the boat, right? So future looks good asset, that's the stock market. I'm worried asset, that's fixed income. Step aside, that's still fixed income. What I want you to get is, wait a second. If I just know which boat to have my money on, this could be a game changer. Again, without trading or timing or having to tune into the latest news cycle or economic cycle. There's a much more powerful way, a simply powerful way, right? A powerfully simple way that has you grow that money and avoid those big losses. Because think about it this way. This is the S&P 500. It's from 98 to 18. So it's about 20 years. It's a good chunk of time. The question is, when that black line falls, significantly falls, right? In a crash-like formation, where does this money go? Because the fact that black line is falling means people are selling, and when they sell, it goes somewhere else. They buy something else. And so when you include shift number 2 and you lessen the amount you buy and hold, there's still going to be buy and hold periods. I like this idea of doing less. The problem is a buy and forget, or buy and forget based on your age or self-described risk tolerance. You don't have to take those huge hits. And so when you reduce that buy and holding, right? Think of it this way. I'm going to measure it in 2 ways for you. If you avoided the dot-com crash, and if you avoided the global financial crisis crash, you got 5 years back of your life. And in the dot-com, your money was able to grow 40% more. And in the global financial crisis, your money was able to grow 35% more. The fact that you weren't able to, that's a loss of growth. In this example of $18,750 a year, and that's on a $500,000 portfolio. So if you had $1 million portfolio or a $2 million portfolio, the losses are double or quadruple that number just on this one shift. There's a better way. Without trading or timing or having to tune in. And oddly, it's about doing less, but doing the right less. So Brian came into my world and he said he wanted He actually felt the burden of the money he had. And he had money of his own, but he also had his dad's inherited money. And he said it's burdensome. And I hear this from people who have the 500,000 or the million or the 2 million or the 5 million. It shows up as a burden. And they start to question the big box advisor or the do-it-yourself pick of the month newsletter world. And in the first half of the training, he wasn't even done with the training. He wasn't even done halfway through the training. He eliminated that burden, went away, and he had the clarity and the certainty. Like he knew, like, oh my gosh, I know I'm going to be okay now. Right? He had the money and he had the clarity with the money he had. He said, you know what? I'll have enough left. And when you understand that at the core of who you are, because you can verify it, what you have is relief. To have a life with less worry. All right, so now we have shift number 3. Now, shift number 1, just to review, was to slow down, stop over diversifying. That was shift number 1. And when you do that, you can gain up to $22,000 a year in the example I showed you. That was shift number 2. That was shift number 1. Shift number 2 was reducing buy and holding. There's periods where you want to step aside. And in the example, that was worth almost $19,000 on a $500,000 portfolio. So the third shift pulls it together. It brings it all together. And the third shift is to filter and verify. Our brain is one big filter. That's literally what it is. It allows certain things in. It filters out other things. And what gets allowed in has been trained or taught to you. So if you're overwhelmed, worried, confused, anxious, have angst, it's because you have a filter that allows in all the noise. The key is to filter out the trivial information and allow in those rare signals, and then to be able to verify those signals. So then, what is the noise? The news, the newsletters, the news channels, your advisor, your fear marketing that you're on the receiving end of. Instagram, Facebook, Twitter, your own thoughts, right? We have tens of thousands of the smartest people on the planet working for Google and Facebook and Amazon and Twitter that have found out and figured out that fear sells better. You have to have a filter that filters out that noise. And I built a filter, which is the third shift. And what's great about the filter, there's many things, but you can implement it in seconds. You can take seconds to filter out all the noise and the confusion and the overwhelm and literally be left with a signal, right? One signal, 2 signals, right? And this is what the signals tell you. And they say, wait, where's the strength in the market? That's number 1. Because that's if when you're not over diversifying and you're not confusing yourself, you can actually find out where the strength in the market is. And the example I used was S&P 500 U.S. domestic had the strength over international for over a decade. That's what I mean by where the strength is. Where do I avoid? What do I avoid? Where do I put my money? But not based on how you answered those questions at Raymond James or Edward Jones or Merrill Lynch or a big box advisor. But it's about the market telling you, hey, it's over here. Put your money over here. And here's the great thing. The strength of the market, those lead areas, those lead slices or segments, they stay the lead for years and years and years. Not for days or weeks, but they stay the lead for years. And then the other thing this filter and verification system does is it tells you, should I even be in the market? Based on the market itself, not based on the year you were born. This is the same filter that taught and showed and trained my training clients to get out of the dot-com crash and when to get back in. And same thing with the global financial crisis, because when you avoid 50 and 60% falls, you gain decades of your life, or half decades, but collectively, you can start measuring it in portions of decades. And the way that one of my clients described this, he goes, it's kind of like seeing something, and once you see it, you can't unsee it. And he said, I thought about the FedEx logo, because he goes, there's an arrow in it. And once I was taught to see the arrow, whenever I see FedEx, I can't unsee it. Now, all I see is that arrow in the FedEx logo. And he took the training and he said, it's like once you see it, you can't unsee it because it literally rewires the brain. The filter that I train my clients to follow is like that. It's powerfully simple. And what you're shown it's like, oh my gosh, I know exactly what to do and how to do it. And one of the reasons Kerry came into my world was he wanted to get rid of his advisor. And what's interesting about Kerry is he had won. He's like, RC, I will never run out of money. I will be okay. My wife will be okay. But this is about the money I have for my kids. And he knew his advisor wasn't helping him anymore. But he didn't know what to do, right? Because he had been trained to be scared and worried and overwhelmed and that the answer was complicated. But within weeks of the training, not months, he fired his advisor and he had complete clarity and confidence that what he was doing would treat that money so much better. And it's because he did all three shifts. He stopped over diversifying. He lowered the amount of he reduced the amount of his buy and holding. And then the third shift, which pulls it together, he was able to verify, okay, well, where should I be diversified? Where is the strength? Where should I avoid? The filter told him. It gave him the signal. He was able to verify it. It also said, okay, well, how long do I hold that position? How long do I hold that position? When do I need to step aside? And he was trained to know what that signal is by following the filter. And so it's the combination of the three that you get the life that my training clients have gotten the life they want. Okay, so let's talk about this because I've given you really some things to think about and take action on. So today I promised you and I showed you and I said, I'm going to show you the 3-step process, but I showed you how over-diversification is hurting people. I showed even by one simple example with being diversified between international markets and U.S. domestic, I've shown how that is hurting. And I showed the solution is to stop over-diversifying. I showed why reducing your buy and holding is a way to increase your returns. All right, this is not trading or timing or having to tune in to the latest news cycle. This is about just knowing what the right signal is. And I've shown you that there's a way to filter and verify that. And the way is to know when the money leaves the stock market and enters the fixed income market. There's a signal. There's a very clear signal that happens. And that signal has preceded every market crash. So it's about knowing the difference between that crash and the correction. And so I promised you I'd show you the 3 shifts and what they are. And I showed you what they are and I even showed you how much they're costing. So look, you have a choice, right? You can either take this information I've given you and be like, oh, that was cool. That was interesting. Yeah, interesting, nice, pretty slides, right? Or you can, and you can continue stressing out over every market turn, having sleepless nights, anxiety, worry, overwhelm, right? But I just want to say you can eliminate this. You can eliminate the stress and the worry. You don't ever have to lose 5 or 10 years to get back to break even, right? You have a choice to make. Now, here's the thing. How do you implement these 3 steps? These 3 shifts? How do you make these 3 shifts in your life? Because it really is about your life, right? You think about how much stress and cortisol is in someone's brain who's always worrying about their money. It's high, right? How do you make sure you don't let those old habits, those old beliefs derail you again, right? And the answer is keep yourself from over-diversifying, keep yourself from, or reduce your buy and holding, and make sure you don't get sucked back into the noise and the confusion and the overwhelm by having a good filter and verification system. So how do you do that? The answer is you get trained. Every professional. Let me be more specific. Every professional sports person gets trained, right? Every season they go back. Think of spring training and baseball. They go back to spring training or the equivalent of it. They go back and they learn, that's right, this is what's best. These are the best practices. They get trained. It's about getting trained. It's about the brain getting rewired so you do what you're supposed to do when you're supposed to do it. Right? And think of this as an example. If you want to be physically stronger or healthier, you hire a physical trainer or a dietitian, right? And it's because what they do is they modify your behaviors, not just your understanding. And if you want to change your behavior, therefore, your results around money, it's about behavior. And here's the thing, everyone should have a trainer for the areas of their life they want to improve. That's what trainers do. And training brings three things. One, brings new ideas. This was kind of a training. You now have new ideas. Over-diversification is hurting you. Not reducing your buy and holding is hurting you. Not having a clear filter and signal has hurt you, right? You have someone hold the standard and provide true accountability, right? And three, you stop making mistakes because a lot of the mistakes, they're in your blind spot. So here's the thing. What happens when you get trained? What do you get? What do you get when you get trained, right? So I've put my 20 plus years, my 2+ decades of intellectual property into 6 powerful modules. And I've designed them in a way that you move through them naturally. So what you get is the 6 modules containing that 20 plus years of what really works, regardless of what the market's doing. I do that in 8 weeks of training. You implement in that training. It's not just listen. You implement. You come with your numbers, your worries, right? Your symbols. It's implementing. That's how people can take action and eliminate within weeks, right? It's your personal numbers. We get an approach for you that's implementable for you. Here's the great thing. By the time the 8 weeks is done, your money's already in action. It's done. It's aligned. Stress has been eliminated. Worry, angst, overwhelm, gone. It's completely gone. You're properly diversified. You're diversified just into the powerful, safe areas of the market, right? You avoid the areas that are just leaking money out of your portfolio. You know when you should step aside or not. It's already happening in your life. And one of the reasons is because I have direct one-on-one coaching in group settings. Your worries, your ideas, your concerns, your insights. It's a life-changing training. And what you really get when you do those things, right? When you take those steps, what really happens is, right? What you get in your life is you get to end over diversification, which could add more than $22,000 a year. An example of a $500,000 portfolio. In a $1 million portfolio, $44,000 a year. In a $2 million portfolio, $88,000 of additional money every year. You get to reduce buying and holding. But what that really is reducing or getting that $18,000, almost $19,000 a year. And that's just in a $500,000 portfolio. If you fixed these two things, the diversification thing and the buy and holding thing, it's about $41,000. Could be more, could be less. That's every year. That's on a $500,000 portfolio. If you have a $1 million portfolio, that's about $82,000 a year of additional money. On a $2 million portfolio, we're looking at $160,000. These shifts are simple in the sense that they're not complicated, but they are incredibly powerful. And when you get that, what you get is you get the control. You get the control back over your money and your life and your future again. You get to know you'll have enough and that you won't run out of money. You get to really be at peace. Your burden gets to be eliminated, gone forever. It's about living a better life. Yes, your money is growing. Yes, you're going to avoid those catastrophic losses. So what's the next step? So look, first of all, you just can't click an add to cart button and get this training. That's not how it works. So the first thing is a very, very short application just to make sure that what you want and what my clients get or ask me to get for them is aligned. It also helps us with the next step, which is we're going to have a conversation. Are we a fit? Do I think we're a fit? Do you think we're a fit? Can I help you get what you want? Of course, you're going to be skeptical. Of course, there's going to be a leap of faithness to it. But it's about, is it a fit? And I'll just tell you right now, if people aren't seriously focused on fixing this, it's not a fit. People who take this training, they are serious about getting the life they want. Most of them have 500,000, a million, 2 million, 3 million at risk in the market, and they want to make sure they're doing what's best for it. All right, and then after the conversation, we talk about next steps if we think it's a fit. So the cost. I think of the cost two ways. One of the cost is it's about 4 hours of your time a week over 8 weeks. That's right. Not 40, not 440, about 4 hours a week. Again, money doesn't care about effort. The second is it's way less than 1 year of lost growth. That lost growth I was talking about was that 41,000. It's way less than that. It's a number that you will say, oh my gosh, I will make that up multiple times a year going forward forever. And also, too, you have to be willing to give up maybe old beliefs, old ideas, old things you were taught that just don't work anymore. Now, look, what this is not buying money management or buying a newsletter or buying an annuity or some sort of insurance product. This is not about trading options or day trading, right? And it's not about being free, all right? The training is like Apollo 13 astronauts. Something went sideways, right? They got back home because they were trained to do it, to get back home. The training is about doing what you're supposed to do even when the market goes sideways, right? The training is about kind of being like a special forces person with your money. If you've gone through special forces or you have a friend who's gone through special forces, you know they just think and behave differently. They sit to their back to the wall looking at the front door. They know, they assess rooms. They behave a certain way. It's natural. It's kind of the same thing with your money. You just know what to do and how to do it. And again, it's the professional baseball. Getting trained, not getting learned, not getting taught, but getting trained, right? It's about doing what you're supposed to do when you're supposed to do it without hesitation, without having to think about it. You just do what you're supposed to do, and your money grows well. All right, so how can I help? So look, can the 3-step strategy work for you? Personally, can it save you $41,000 and change a year? I don't know, guys. I don't know. But look, I've set aside time to speak to you personally about how you might be able to apply these ideas, these 3 shifts, this training to your wealth and to your life and to your investments. And you can do it today. It can start today. It's not 80 months away. You can literally measure this in hours and days to where you have your life back, where you have control back over. And I just want to say, whatever your biggest challenges are, I've seen them. I've been doing this for 2+ decades. I've had clients who have $500,000 up to $10 million. I've had clients who've lived in Africa, in Europe, in Asia, in Australia, in the US. I've seen the problems. And of course, the call, well, I guess I shouldn't say of course, but the call is free, right? You do have to take the application. And so here's my ask of you. Be fair with this time. Be on the call. Be ready to go. The application helps me so we can jump into the conversation and really understand what is and is not working. Okay, guys? So who is this for? It's for people like Carrie and Todd and Dean and Brian, right? Carrie wanted to get back control over his money and fire his advisor, right? Todd had done everything the right way. Todd even said I'm a trained economist. I was never trained to grow my money like this. He wanted control back over his money. He wanted to know he was going to have enough. Dean had tried everything. Option trading, swing trading, he had a securities license. He did everything. But he wanted his confidence. He wanted confidence and competence now that his earnings runway had ended. And Brian didn't want his money to be a burden. So why get trained? End your over-diversification. Reduce your buy and holding. Get that filter that you can verify. It's about true peace of mind. It's really about growing your money well and avoiding those large losses. It's about having a better life, sleeping better. A before and after type experience. Thanks, guys, so much for listening to this and following along. Look, the next step is super simple. There's a button on the screen that you can click. It might say book a call. It might say do the application. It might say next step, but it's clear what the button is. Or you can go to fearlesswealth.com/apply. The point is the next step is now. There is a better way. And you are noticing that it's interesting, right? Because people were taught, people often believe that it's the right diversification and that buy and hold is the best, right? But when you start to notice that actually it's the result of doing these two things where the pain comes from, right? Over diversified, being buy and holding too long, that's the cause. And if you just start to notice that, if you shift those two things, then you start to get the control back over your money again. Because there's more to lose now. There's more to lose now. Because when you're moving closer and closer to your retirement or to acquiring the choice to not have to work or just your earnings years are stopping, you have more to lose now, not less. The step is super simple. Go ahead, click the button, book a call, do the application, book the call, and we will speak. You guys take care of yourselves. Thank you so much. Okay, bye.